because Bitcoin is treated as property when it comes to taxes, there are some steps that you can take to take advantage of this when it comes to taxes and the cost basis of your Bitcoin. So if your parents are still around, one thing that you can do is gift them Bitcoin underneath or equal to the gift limit, which is the amount of value that you can give to somebody, that's under like $18,000 or somewhere around there. Obviously, for all of this, talk to a tax professional, but just something to look into. So if you're giving them a gift of Bitcoin, that's, let's say, $18,000 or up to $18,000, they don't have to pay taxes on that as if it's income. And if they hold on to it, and when they eventually do pass that on to you, the cost basis for that Bitcoin is stepped up. So meaning if you bought Bitcoin at $100,000 and your parents pass away 20 years from now and Bitcoin's at $1 million, the cost basis goes from $100,000 to $1 million. So if you were to go ahead and buy a house or something with that $1 million, obviously these numbers don't make any sense, but if you're just following it for the example, if you were to buy a house for $1 million, then you wouldn't have to pay taxes on the gain that happened, that $900,000 gain. So something to consider. But one thing that you should keep in mind is that it will likely involve doxing to the government that you have that Bitcoin when your parents pass away and the estate is passed on to you. So that's one thing to keep in mind. Also, your parents could spend the Bitcoin too if you're going to be sending them Bitcoin. So there's that risk that you wouldn't be getting it back. So don't necessarily treat this as some sort of retirement account, but it could be a strategy if you're on the same page with your parents to be able to have the cost basis stepped up. This is something that happens when it comes to houses. So it's just something to keep in mind when it comes to Bitcoin.